2.4 is going to expand on our ability to do a balance sheet with a list of items given, but also some additional information. So the additional information we've been given in this question is that the business has earned a profit, but the owner is unsure how much. Secondly, a friend has offered the owner $3,500 for the office equipment. So we can see that the office equipment here is listed at $2,900 and we've had an offer of $3,500. We've also got the owner thinking of buying a computer system in October for $2,000 or about $2,000. It's just an estimate. So the first thing we'll do is go section by section. We've got current assets again. We're going to go through and find cash at bank. We've got stock of pamphlets, stock, debtors, and stock of cleaning materials. We'll talk about GST, whether it's an asset or a liability, later. I'm going to total that up and get total non-current assets, current assets of $593,710. Going to our non-current assets, we've got cleaning equipment, office furniture for $1,800. I've got office equipment. Now it's been listed at a cost of $2,900 and a friend has offered us $3,500. So we're actually going to leave it at the $2,900 under the conservatism principle, which says whilst we might have a gain, it's not certain, so we don't recognise it. So therefore we'll just list the office equipment at $2,900. We've got land and buildings, and that'll be all of them. And we've got one last additional bit of information, which is the owner is thinking of buying a computer system in October for about $2,000. Do we put that in? No, the balance sheet's a list of things that have happened. Remember, the definition of an asset is there must be a past event or transaction. There hasn't been a transaction in this case, it's just the owner thinking about buying something, so we won't include that. We'll now total up our non-current assets and we'll total up our total assets for $699,210. That'll take us through to our current liabilities. We've got a creditor. We've got the loan from the National Bank. Now we're doing this balance sheet at the 30th of September 2015. That loan's due in July of the following year. So that's within 12 months. So that'll go in like so. We've got the mortgage. It's $75,000 and we're told we must repay it $600 monthly. So under the current liability section, we're going to have to figure out there's 12 months in a year. We're paying $600 a month. There's $7,200 due in the next 12 months. Brings us to the issue of GST. We've got GST paid of $240 and GST collected of $5440. Is this an asset or a liability? So going back to our GST topic, remember, when we collect or charge GST, it goes into our pool of GST and it increases our liability. We get to offset that though with what we've paid or been charged by other providers, and that therefore reduces our GST liability. So in this case, I've collected or charged $5440. It doesn't belong to the business. I'm holding it. It's an obligation that I have to pay to the government. So that's going to be my liability, but I get to take out the $240 that I've already paid. So the $5440 is reduced by $240. The net result being I've got a liability of $5,200. So going back to our balance sheet, I'm going to put in GST as a current liability for $5,200. Total up the current liabilities and we'll move on to non-current. So we've got the mortgage. Now remember, it's $75,000, however $7,200 of that is current. So what I'll do is take the total balance of $75,000, take away the current part, and that'll leave $67,800 as the non-current part of that. That's all of it. So what we do, remember, is if there's only one item in a section, we transfer the balance to the second column. We don't leave it in the first column like that. We move it over. That'll give us to owner's equity, and this is kind of tricky. We're told that basically, it's looking at the numbers here, starting capital is $240,000. We've got a bit of a problem here. If we add up our assets, we've got $699,200. Liabilities, we've got $114,200. Well, that leaves us with total owner's equity of $585,010. Yet we're told that owner's equity or capital is $240,000. So what's the difference here? Well, it relates to this last piece of additional information, which is the business has earned a profit, but the owner is unsure how much. So what that must mean is that if total owner's equity is $585,010, we know that capital is $240. So if we subtract that away, that must mean the difference is $345,010, and that must be our net profit for the period. So we'll add that in, and that'll give us a total owners' equity of 585,010. If this is a topic that confuses you, don't worry, it's not going to be on the current SAC. It'll actually be a topic that comes up on SAC 2A in Unit 3. We'll now total up our right-hand column, and we've got total equities of 69920, again proving that the balance sheet does balance.